As 2025 is half over, there's a notable surge in interest and activity surrounding AI-related stocks. This week, the market has seen a significant boom in these shares, signaling strong investor enthusiasm. To better understand the dynamics at play and where these stocks might head next, market beat analyst Chris Murat has been diving into some of the more intriguing AI companies, not just the big-name semiconductor giants, but smaller, innovative players that are carving out important niches in the AI ecosystem. Chris highlights that the market is now shifting beyond the initial excitement around generative AI applications, such as those driven by large language models or chatbots. Investors are increasingly focusing on companies that are integrating AI into practical applications and devices that offer real value to businesses and everyday consumers alike. The AI buzz is becoming more about meaningful implementation and less about hype. One promising sector in this regard is robotics and automation, fields where AI is directly embedded into hardware to enhance functionality, efficiency, and user experience. To illustrate this trend, Chris points out recent market interest in companies like SoundHound, which specializes in voice AI applications and has seen widespread adoption across various industries. However, his focus today is on three lesser-known robotics and automation stocks that show substantial potential for growth. These firms are innovating with AI in ways that could deliver significant returns for investors willing to look beyond the mega-cap names. First pick, UiPath, ticker PATH. UiPath, with a market capitalization around $7 billion, is Chris's first stock pick. While it isn't exactly like SoundHound, it shares some similarities in terms of operating in the AI software space. UiPath is a mid-cap software company specializing in robotic process automation, RPA technology. This technology helps enterprises automate repetitive and routine tasks using software robots. Instead of physical robots, UiPath solutions deploy software bots that can handle tasks such as customer service chatbots, data entry automation, and complex workflow management. UiPath serves a broad spectrum of industries, including banking, healthcare, manufacturing, and more. Its enterprise clients include well-known names like MongoDB and Flutter Entertainment. The broad industry applicability makes UiPath a versatile player in the AI automation space. Despite its potential, the stock has struggled this year, down about 44%, which could represent a buying opportunity for investors looking for undervalued assets in AI. From an analyst perspective, there is a consensus price target around $17.50, with some prominent financial institutions, such as JP Morgan Chase, assigning targets near $18. Given the current trading price around $13.86, this indicates a significant upside potential. Over the past month, the stock has gained roughly 11%, which might be partially driven by short sellers covering their positions, but there also seems to be genuine renewed interest from investors. This combination could lead to momentum going forward. The key to UiPath's growth lies in its ability to continue expanding its client base across various sectors and demonstrating consistent revenue and profit growth. The company recently turned profitable, which is a crucial milestone. Investors should watch closely for continued year-over-year revenue increases and improving earnings, as these fundamentals will support a sustained rise in the stock price. Second pick, Intuitive Surgical, ticker ISRG. Chris's second pick is Intuitive Surgical, a large-cap stock well known for its pioneering work in robotic surgery. Intuitive Surgical is the company behind the Da Vinci surgical system, a robotic platform that assists surgeons with minimally invasive procedures. This system comprises several products designed to enhance precision, flexibility, and control during operations. Unlike UiPath, which is more of a software player, Intuitive Surgical is deeply embedded in the hardware side of robotics. Its products have become a staple in many hospitals worldwide, and its stock has reflected this success, rising about 61.6% this year. The shares currently trade above $500, leading some to wonder if there's much room left for growth. However, Chris points out that the company continues to innovate by upgrading the Da Vinci system and expanding its adoption among medical professionals. The more hospitals and surgeons that use the system, The greater the network effect, new adopters are influenced by their peers who have already embraced the technology, creating a virtuous cycle of growth. Additionally, falling interest rates might make capital expenditures on expensive surgical systems more feasible for healthcare providers, potentially driving further sales. Analysts remain bullish on ISRG, viewing it as a stable and growing player in the AI robotics space with solid fundamentals and a strong competitive moat. Investors interested in robotics with real-world applications in healthcare would do well to consider this stock. Third pick, Rhythm Technologies, ticker IRTC. The final company Chris highlights is Rhythm Technologies, which might be less familiar to many investors. Rhythm has a market capitalization just over $2 billion, placing it in a borderline small cap as mid-cap category. This firm is innovating in the healthcare monitoring space, specifically designing mobile heart monitoring systems. Rhythm's products focus on detecting arrhythmias, irregular heart rhythms, which is a critical area in cardiology. Patients wear Rhythm's monitoring devices, which collect and transmit heart data directly to physicians, providing actionable insights for diagnosis and treatment. The real innovation here is how AI enables remote, continuous monitoring with actionable intelligence, making healthcare more proactive and personalized. So far, Rhythm's technology is primarily used in the United States and focuses only on arrhythmia detection. This limitation has held back the stock somewhat. However, the company is actively working to expand into international markets, which could open up a total addressable market worth around $1 billion overseas. Furthermore, Rhythm is seeking regulatory approvals to broaden the scope of its devices, aiming to detect other conditions such as sleep apnea, hypertension, and heart failure. If successful, these expansions would significantly increase Rhythm's market potential and could be transformative for its stock price. Currently, the shares trade for over $90, which is notable for a smaller company, yet analysts still project around 19% growth for 2025. Some analysts are extremely optimistic, with recent price target hikes from firms like Canaccord Genuity pushing estimates as high as $152 per share. Summary and outlook. Overall, these three picks highlight a broader shift in the AI stock landscape, from the headline-grabbing generative AI models to companies that embed AI in practical, high-value applications. UiPath offers enterprise automation solutions with a wide industry reach. Intuitive Surgical delivers cutting-edge robotics in the medical field, and Rhythm Technologies provides innovative, AI-driven healthcare monitoring. Each company faces different challenges and opportunities, but all are leveraging AI in ways that promise tangible benefits to users and, consequently, potential returns for investors. The trends Chris outlines suggest a maturing AI market where sustainable growth is linked to real-world adoption and application. Investors should keep an eye on financial fundamentals, such as revenue growth, profitability, and expanding addressable markets, as well as broader economic factors like interest rates, which can impact capital spending on technology. Additionally, market sentiment and short interest could influence near-term price moves. That was all from us today for this video, folks. See you in the next one.